Welcome, and we're right on time. So I'm going to start with a short video clip, and then we'll go into the actual training material. Why Elite? Old Mutual Insurers decided they want to enter the high net worth insurance space, and we're very excited to be launching this business to the market. Elite is a specialist policy that really caters for high net worth clients. We insure everything from buildings to contents, fine art, collectibles, your liability exposures, your yachts and your speedboats, classic cars, exotic cars, and your travel insurance will be in place uninterrupted throughout the year for you and your family. All individual pricing based on your unique risk profile. We're part and parcel of the Old Mutual Insure stable, part of the family. We've got a product called AllSure for large market personal lines, and Elite will complement the AllSure policy at the top end. In order to qualify, you must have a minimum of 4 million rand combined assets or a minimum of 1 million rand on your contents. We've done extensive market research. There really is a real need for the Elite product in the South African market. We believe Elite, being backed by the Old Mutual, is the strongest from a substance and credibility perspective. We've set up Elite as another product that is available on the Old Mutual Insure systems. If you have an active and valid agency with Old Mutual Insure, you will be able to access the Elite product seamlessly with no process to go through. The future is all about profitable growth. We really want to take this business on a long journey and create a company that will be around for the next 10, 15, 180 years, why not? And give our brokers a policy and a product that is absolutely rock solid. Contact with us, eliterisk.co.za. We'd love to do business with you. I just wanted to give you a little bit of a background as to how Elite came about. I had the great privilege of running another specialist underwriter for 10 years in the high net worth space. And about 4 years ago, I became disillusioned with the risk carrier that we changed to. So I really wanted, for many, many years, literally for about 8 years, I wanted to have an underwriting managing business for the Old Mutual or Mutual and Federal brand. And it took a long time for me to actually get that dream to a place where we are now. We are confident that there's a need for another high net worth underwriter in the wealth space. We know that we've got competition. It's not new. We're not launching a new market here, but we've done extensive market research, and our clients, our wealth clients, are insured all over the place. They with Outsurance and Dial Direct, and they with Santam, and even with Mutual and Federal, Old Mutual Insure themselves. And I'll give you a good example of why I say that. So in the OMI space, we have 12,500 clients, 480 million rands worth of premium, who already qualify for the Elite product. So that's AllSure clients. So that just shows you that those clients are not insured in the correct place. If you go to Santam, Hollard, and the rest of the market, you will find clients who are all insured inadequately. So the market segment is quite big, and there's great opportunity to grow portfolios by going after these clients. We are very proud of the product that we've created, and I'm going to take you through some of the things that we're bringing to market. So we believe that we're different because the way that the company is set up. So we're a separate commercial entity. Elite is a separate company with a separate board of directors, but we're wholly owned by the Old Mutual Insure company, and we underwrite for Old Mutual Insure. So that makes us different from the rest of the market when it comes to our competitors. And I say that because it really does have an influence on the product that we take to market. So when we did our research, we heard from our brokers that they want to deal with a separate entity. They want to know that they're dealing with a team of specialists and not be thrown into the big pot and the horror word of call centers, that you have specific people that you will get to know and that you will work with. So we've decided to take the best of both worlds. We've got a specialist underwriting business that is set up. We are based in Cape Town, and we've got already a team of 9 people. Patricia if Patricia can just stand up quickly. She's our business development manager for the Gauteng region. She's joined us a couple of months ago already, so you'll get to know her over time to come. Thanks, Patricia. So it's established as a separate entity to the market. You're dealing with specialists, but integrating into the back office systems of Old Mutual Insure as much as we can, and get the benefits of the economies of scale and service, and all the things that we couldn't get, that I previously in my previous life couldn't get as a standalone UMA. Obviously, we knew when we did the product development. So the product development was done by myself. And Tarina Flock, who's our general manager. Tarina comes from Santam. She was head of personal lines product development for 10 years there. And she also worked with me previously at MUA and at Thatch Risk Acceptances. It's an interesting point because Thatch Risk Acceptances was my first company that I started. It was on the 1st of July, 98. So 20 years ago, I started my first UMA. And some of you in the room supported me with TRA from day one. And it's wonderful to have relationships that go back that far when you are in the privileged position to be doing something again. So the product that I'm going to go through now is, we do have a few unique benefit features, and I'll explain that to you. We just have to start with who qualifies. So it's combined assets of 4 million over multiple risk addresses, or a minimum of 1 million on contents. Many of you say, well, this isn't really high net worth, I qualify, whatever. We had to set an entry level, and this is market related. So this is how you qualify for the product. We don't do motor only, and you can't qualify by adding your motor value into this combined value. I just want to note that we're going to circulate everything after the sessions. So the e-learning training material, this presentation, the product comparison between All Sure and Elite, the policy wording, everything, you will receive everything. So if you don't feel like taking notes, you really don't have to, because you'll get the electronic notes. And it will also be available on the Old Mutual Insure broker portal. If you're not sure how to get to that, you can ask any of your consultants or relationship managers from OMI just to show you where to get the material. It's already actually available, and we'll be circulating the material afterwards. Very important is, how do you get hold of us? Everyone wants to know, where do we get hold of you? It's really simple. We've got one email address, and that's where everything goes to. It's reception@eliterisk.co.za. We also have a telephone number. You can phone us if you want to. But I know that nowadays we do most things via email. And from that email address, it goes into all our different workflow email boxes. So you just have to know that one email address. If you send a quote there, you will get your quote. If you send an amendment or a query, you will be responded to from that email address. We know that in this space, and actually the approach of proactive risk management is very, very important when it comes to your high net worth clients. So when we did our research already 10 years ago, we realized that the UK market is a very mature high net worth market. So that's what they've been doing, insurance for high net worth clients there. They say 100 years. I don't know if they've been able to, if personal lines insurance have existed for that long. But when we did our initial product research 10 years ago, and again now, you don't see the average condition in the UK wordings for wealthy clients. It's an agreed value policy, and we couldn't understand how they do it, because underinsurance is such a big problem. But the reality is they do valuations. So we've adopted that at Elite as well. You get included in the base premium. So no additional premium on the policy schedule. Included in the base premium, you get the no average condition or benefit, where there's no average included. And then we will appoint a evaluator. The evaluators is a national panel that we've put together of independent external specialists. They'll do the buildings and contents. We have unfortunately seen, more than 100,000 valuations later, that there is a 40% underinsurance in both buildings and contents risks in South Africa. And it's one of the main reasons why clients are so unhappy when they've had a large loss, and all of a sudden the payment gets reduced quite significantly. So our main purpose is to never have to reduce claim payments. We don't want your most important clients, your owners of your big companies, your CEOs, your CFOs, and your business owners, that you as a broker have to go to that client and say, actually now the claim is now 40% less, or we're not going to pay this because we didn't know that what. We want to try and do everything up front. So we do the assessment of the property, we engage with you if there's a problem, we sort it out before there is a claim. And also, if you don't like it, that you can move the client somewhere else. but that we have fewer claims issues. It's the main purpose of this. And then, of course, the client will have the benefit of no average on his contract. The policy that we offer is a completely comprehensive policy. We do everything from buildings, contents, personal all risks. I'll explain how that works in our world. Liability, watercraft, personal accident, travel insurance. We'll stand still on that a little bit. So really the full spectrum of personal lines insurance classes. But we're not going to go into liability and watercraft and this list personal accident today, because those covers are relatively standard, and we would rather expect you to go through the wording if you have issues. If you can come back to us, we're going to really focus on the areas where it's different from your standard personal lines policies. When I talk today, I'm not going to talk about comparing the elite product with MUA or Echelon or Aquarius, because that would be unfair. I'm going to talk about how we compare to Allsure and a standard policy in the market. If you want to see how we compare to the competitors, it's up to you to do the comparison. We're not allowed to do that from a compliance perspective. We don't understand how their things work, and it really isn't fair to do that. You will also not find in our product medical expenses and trauma counseling, and this is as a result of the demarcation in the medical aids legislative environment. So if these covers still exist in some personal lines policies, it will be taken out very soon, and we've decided to go to market with the right cover from the word go. So I'm going to start with the property section. When you look at our policy wording, you'll see that we have a property section and a motor section and liability and all of that. We don't have house owners, householders, all risks. And the reason why we did was we wanted to make the wording shorter. The wording is only 80 pages, and that includes the travel section. It's short, I promise you, if you look at all the sections we have. It's written in plain language, and we just realized, obviously, if I say it now, it's the obvious thing, but all the exclusions and the conditions, they're more or less the same for all the property classes, so we put them all under one section in the wording. When you get a quote, the quote will have buildings, contents, or risks, so it will be separated on the actual quotation. Our policy is on a proper assets all risks basis. It's a policy of exclusion. With other words, we cover everything unless it's excluded. It's very simple and straightforward. It's easy for your staff to understand how the product works. You just go and look at the list of exclusions to see if something's covered or not. Our extensions, so we've got our standard cover, and then we've got a whole bunch of extensions. We'll touch on some of the extensions. The extensions are on top of the sum insured. So effectively, we could have a client claiming 125% of the sum insured. If it is a total loss on the building and he takes the full alternative accommodation and everything, the 25% of extensions come on top. The extensions don't carry an excess. Property sections carry R1,000 excess. I just want to take some examples of things that we've done that's different from the rest of the market. So we've got a rental top-up extension. So it covers the difference between the alternative accommodation for tenants and the actual rental contract. So many of our clients buy properties as investments, and then they rent it out. And then 6 months down the line or 12 months down the line, we've got a fire, and the client then has a responsibility to put his tenant up in another property. This policy will even cover the difference between the contract and the increased value to host that client in an alternative premises. We obviously cover clearing of debris. We have a claims preparation cost extension included, which is unusual for personal lines. It's R20,000. We cover R50,000 reward in order to recover items. We know our clients like to get their stuff back. They don't want to just get money or replacement items. They often want the actual item back. And often our claims are inside jobs, and we know where to go and post the reward. So we use this reward as a nice enticement to recover the item. This for me is one of the most key differentiators between our policy and our competitors. Normally a policy says the insurer retains the right to repair, replace, or pay out cash. The elite policy says the client retains the right to repair, replace, or pay out cash. Because we know our clients want often to take the cash because they only shop overseas, or they, well, basically that's the main reason. They want to buy their Persian carpets when they go to Turkey. They want to go and shop for bags when they go to Dubai on their quarterly trips. So to force someone to replace an item at the time of the loss is not fair in this segment. I'm going to preempt a question on jewelry because it comes up in every session. Of course, jewelry, your client can choose to get the cash payment, but we will still negotiate the settlement of that item, the cash settlement. We will never expect your client who's got a Charles Gregg pair of diamond stud earrings worth 100,000 Rand to go and replace it at jewelry replacements at 50,000 Rand. That is completely wrong because they buy branded items and designer items and they pay a premium for it for a reason. I mean, in my mind, it's exactly the same as saying a Louis Vuitton bag is a leather handbag so you can go and replace it at Woolies. You pay more just for the brand. The bag is the same. So that's something we inherently understand. And again, that means when we do cash discount, when we do cash settlements with jewelry, if it's a Charles Gregg pair of earrings, normally when we get, the replacement quote, it's not 50% less, it's 10 or 5 or maybe 12.5% less. And that's what we will deduct from the cash settlement. Accidental damage included up to the sum insured. Power surge included up to the sum insured. Mechanical and breakdown included up to the sum insured. And subsidence and landslip comprehensive cover included up to the sum insured. So it's a very comprehensive product, and it's very important. I want to tell you about an example of a claim that we had, this power surge thing. It was a very, a relevant issue you raised, because with a previous load shedding we had about 4 or 5 years ago, we had a client in Nettleton Road in Cape Town, and he had a very expensive electronic system built into the house. So, and then obviously the generator that was also on the property, and then when the power would go off, the generator kicks in, and then when the Eskom comes back on the generator, so there's like a splitter where the power gets sent from the one place to the other. It was load shedding. We all survived load shedding, and the client was out. And Eskom power came back on, and it was a power surge. And that splitter actually caught alight. And then the whole IT room, the IT room in the home, caught alight, and the whole electronic system was damaged, and there was an actual fire. It was a 15 million Rand claim, and if that client didn't have power surge cover in terms of an assets or risks policy, the proximate cause was power surge, he would have had a major problem. So it's important that in your specified perils, personal lines policies, that you check if your clients are adequately insured, and if they've got the right cover. So that's just something I wanted to mention to you. And you can do buildings on a standalone basis. And then we cover everything at the risk address, and this everything but the gravel roads and but retaining walls, all structures on the property is covered against the main cover of the policy as well as subsidence and landslip. We have some nice extensions. We are prepared to remove trees that is a threat to the property. New fixtures and fittings are covered up to for 30 days, because that we've had the valuation done. So the client's got a 30-day window to let us know that the property's value must be increased. We do pest extermination up to 25,000 Rand. Temporary removal of fixtures. Clients take stuff from their property and they have it serviced. Air conditioners, audio-visual equipment, and while it's removed from the property, it's also insured at the premises. So next up we have contents. It's the section where we have the biggest differentiator from our competitors, and some people battle to get the whole concept, grasp the concept. So again, through assets cover, you've got full cover for accidental damage, power surge, mechanical and electrical breakdown, and we insure contents on a standalone basis. So where the difference comes in is with our worldwide assets out extension. So how we see this is, we don't have a personal or risk section on our policy. You have a content section that covers everything that you own. If you go outside of your house, you have an international assets extension. It can be 20%, it can be 25%, it can be 50,000. That amount, we default quotes to 20%, but obviously this cover costs money. So, that amount varies depending on what the client currently has, so that we can do an apples for apple quote. But the reality is, everything that you take out of your house, whether it is a piece of art, or a cell phone or a laptop that you use, and we've actually changed the wording in the last few days. Even business laptops and cell phones are covered under your international assets out extension. So you have really, there's nothing that needs to be specified in terms of this section, but you need to make sure that your client is adequately insured. So what is the client's maximum exposure at any one time? Where we run into trouble at the moment is actually with bicycles, because bicycles are covered under this section. But when you think about people going on, away, and they take 2 or 3, Catherine, you would know this, take 2 or 3 bikes with them, and it's expensive bicycles, you could actually have quite a large personal exposure. Obviously, jewelry would be covered under this extension, and any item that you carry with you would be covered under this extension on an international basis. So what we've done with our safe warranty, because we know it's a pain and it's a problem for people, so what we've done is items over 50,000 must be kept in a locked safe when not worn, but that warranty falls away when there's signs of forcible and violent entry. Okay, so that's the sort of the one thing that we changed, and then also anything that's specified, because I want to talk about specified items now. Anything that's specified does not have to comply to the locked safe warranty at all. So the maximum that you can go up to is 25%. But now you might have a client who's got R1 million contents, so that gives you 250,000 rands of assets out. But he's got or she's got a 500,000 rand ring. That item we will specify under the contents. Anything that's specified is not subject to the security requirements. So I really would recommend when you look, now we look at specified perils policy, so it's all risks, normal personal all risks, and then a long list of specified items. Look how much of that you can cover under the assets out, and then you still specify those items that are over the limit and that you feel should be excluded from the locked safe warranty. It's the best way to do it. Okay, so students' belongings or parents in old age homes, you've got automatic cover for that. But signs of they must be it's subject to signs of forcible and violent entry. We cover theft of money up to 50,000 rand when it's in a locked safe, unless there's signs of forcible and violent entry, and that is also a threat to the individual. So but we cover no signs of entry under 5,000 rand. So that's sort of the cover that's available when there's no signs of entry. And then the threat of force is also seen as signs of signs of entry. We cover digital currency, Bitcoins, but not because you were stupid to buy them in the first place, because that's what happened to me. My husband made me buy Bitcoin, and I lost money. So this is if they hack into your electronic wallet. So it's a cyber type cover. This we give you a 200,000 rand window. To let us know if we need to increase the sum insured for new contents after the valuation has been done. So any large purchases, you don't have to list every item, just make sure that the sum insured stays adequate. So fine arts and valuables cover, this is where you specify the items that are over the 25 or 20% sum insured assets out limit. So you would list items here. You would list your art collections. If your clients want the specific art cover, you would list your jewelry, and like I said, business contents away from the premises, that's fallen away. So we've decided to cover that under the assets out. So just ignore that. That's not relevant anymore. And the valuations on this extension is for the client's own account. So if it's a fine art collection or very high jewelry valuations, and let's just talk about valuations for jewelry. So we don't have a requirement in terms of our policy for you to give us a valuation certificate of less than 3 years old, dated prior to the loss, because we know that is also a huge problem. So we ask that your client proves his loss to us. So it's always best to have the valuation, because then everything is on there. The technical information, the color of the diamond, the size of it, everything's there. It's very easy for us to determine the replacement value and reinstate the client. If the client can't give us a valuation, we have changed the wording to say you can give us the proof that the thing is on the Rolex register, or that you bought it from this and you've got the original slip, perhaps some people keep that, or even a photograph of the item, and we can determine through the photograph what the replacement of that item would be. And then, of course, if we saw through when we did the inventory of the contents, it gives us the proof of the fact that the item actually existed. So then we just have to determine what that value is and how we're going to replace it. So like I said, always first prize to have a valuation certificate. But we wanted to keep the opportunity open to settle claims where clients do not have valuation certificates. Because it's such an unpleasant and really, it's a big problem area, these valuation certificates. You know, we'll replace a MacBook computer of 50,000 Rand without a valuation certificate, but then we won't do a ring. So we decided to change our wording. It's great cover, really. It's peace of mind. You put the cover in place and you don't have to worry about listing a little items here and there and the client not being covered. And then we've got some other reasons why you want to specify items. For instance, we have death of the artist. Following the death of the artist for a 12-month period, there's an increase that normally the values would increase. We cover that in terms of the policy. We cover fine artworks in progress, limited to 100,000, but at least it's 100,000 Rand cover. We also cover defective title. So if someone sold a painting to you that was a fraudulent transaction and that item gets, recovered, taken back, you can claim up to 50,000 Rand for that loss. If it's an item you inherited from your grandfather and it was fraudulent, then we might have a problem. We know our clients travel a lot. And they often only remember to do their travel insurance when they have to renew a visa. So with the research that we did in the European market, they actually have travel insurance as part of your personal policy. So it's a year-round, 24/7 travel solution, and it just sort of stays in place. So we've included this in our cover. It's international travel cover. We've got various programs, options in place, but it's for leisure. We've got leisure and business options. Your medical expenses are covered, delayed baggage, travel delay, missed connections, cancellations, curtailment, and then end supply insolvency. We've got silver, gold, platinum, and business, and then the medical expense cover limits there. It's underwritten by Old Mutual Travel Sure, so it's our own offering. And I just want to mention to you, some of you who have a large commercial and corporate accounts, corporate travel is a great benefit that you should be selling to your clients. A lot of our clients actually travel into Africa. Staff of our clients travel into Africa. It's got nothing to do with Elite. I just want to mention that we've launched this product at the end of last year. And remember to request quotes. It's something I think maybe employers don't always think about. And Old Mutual Insure now has this offering available on the commercial and corporate policies to insure the staff traveling overseas. And then I think important to note, and this is a case with a lot of the travel insurance policies, it's in excess of the underlying credit card limits, but everything is handled seamlessly. We don't go, client has to claim from the credit card when he's lying with a broken leg in wherever it is. This is interesting with travel. When I was with Europe Assistance now for 2 years, we did travel insurance there. And one of the things that I found the most interesting is that something happens to men in South Africa when they reach the age of like 40, 45. And then they want to go and climb, not Kilimanjaro, Mount Everest. and then they get sick. So we actually had to bring 3 guys back from Mount Everest in the 2 years that I was there. And it's very expensive to bring those guys back because it's quite remote and it's quite challenging. So yeah, look after your wealthy clients and make sure they've got the right insurance cover. So this is international travel. It's only outside of South Africa, and it's also, again, as a result of the medical demarcation. Okay, so on to motor. At Elite, we insure normal motor. We obviously insure exotics. We insure your executive cars, classic motorcycles. We do trailers, caravans, anything that's on wheels you can insure in terms of the Elite policy. It has to be supported by buildings and contents. We don't do standalone. We only do classic cars standalone. So if the client has got a classic car portfolio, we'll do a standalone policy, or a classic car on its own. We'll do a standalone policy there. We've got a few nice benefits under our motor section. Some of you who know the Santam guaranteed value, I think, concept will recognize it here. So we call it the sum insured value. We guarantee the sum insured. Your client buys a car at the beginning of his insurance term, it's 500,000 Rand. He has a total last month 11, and the car's worth 430,000, and then that's what he gets settled. Here we guarantee the sum insured on 500,000, and that's the basis of settlement. Okay, so it's a really nice benefit. It's a bit of extra premium, but every year we review that. So we set the sum insured at the beginning of the 12 months of the renewal term, and then that is the basis of settlement for the full 12 months. We do replacement of your vehicle, new for old, for the first 2 years and 60,000. It's not unusual in the market, but it's a very nice benefit. So I really think it's worth taking the policy for that extension. We do repatriation of mortal remains up to 10,000 rand following an accident. It's unique, and a lot of policies don't cover this. We obviously cover your hair towel and spotlights. And then your car hire is embedded. So the way that we've done it is every car in the policy has got car hire included. It's your standard economy. But you can do with that whatever you want to. You can go up to group H. You can buy up. You can reduce the number of days. You can increase the number of days. This is 30 days economy. So we've made it very, very versatile to make sure that your client has got adequate cover. So what I suggest you do is if you've got 4 or 5 cars in the policy, keep the standard car hire, and maybe just the main policy holder who's got an expensive car, do an upgrade to a higher group that he's got the right cover. Our car hire is done through Avis. We also cover the difference in excess of a hired vehicle. So you can hire, whatever reason you hire the vehicle for, whether it is private purposes, business purposes, and you're involved in an accident, up to 10,000 rand is covered by this policy. So what your excess is on this policy compared to what the car rental company is going to charge you. I heard the other day in the PE session that someone got slapped with a 68,000 rand bill. So I don't know how that is even possible. So we are reviewing this limit as well to see if it can be increased. We cover self-driving vehicles. You might think why? Well, most of the luxury cars nowadays, you can go into self-driving mode to park. So this policy specifically, we noticed the UK wordings have been adapted. South Africa, we haven't done that yet. So this policy is specifically extended to include self-driving vehicles. And then this is very nice because I know our competitors don't cover it and it's a major problem. We cover the vehicle while it's on the dealer's floor if the client's trying to sell the car. It happens with our portfolios a lot. Our clients have got a number of cars that trade their cars often. And this is actually a problem because if you don't cover it in the personal policy, often clients can't get the insurance. So it's obviously there are some requirements around it. But and just so that you know, the small print is actually the wording extract from the wording. So if you look at this document afterwards, you can actually refer to the actual cover in the wording. And then this is something I just want to explain to you. So it's actually a cover it does not exist in South Africa at the moment, and we don't even know if it's available anywhere in the world. It's a true innovative cover that we're bringing to market. So just after I left MEA, when I started with Europe Assistance did the Land Rover under warranty roadside assistance program. So Land Rovers break down a lot. So we had an Umi in George who had a breakdown, very expensive Range Rover, 1.5 million. We picked up the car. It was a breakdown. It wasn't an accident. And then the towing operator that we appointed was involved in an accident. And the car was damaged to the tune of about 400,000 rand. We obviously took immediate action. We had the car repaired under warranty, delivered it back to the client, and he said, I don't drive cars that have been in an accident. I want a new car because I bought a new car. And we were like, that doesn't work like that. Insurance doesn't, we just have to repair the vehicle. So anyway, that's when the whole thought process, and I think you've got many clients like this. They buy new cars because they drive new cars and then they have a partial loss and they don't want that car back. So this is what this cover is for. It's an optional extension. You have to tick it. And it covers the difference in your trade-in value before an accident and following an accident. So your client has 30 days after he's taken delivery back of the repaired vehicle to trade it in, and then the elite policy will cover that gap. So it's like a gap insurance for the depreciation in value following an accident. It's only for cars over 750 and only vehicles under warranty. We cover an extensive list of countries in Africa where you can take your vehicle to, but we also cover an extended list of countries, which includes DRC, Burundi, and Rwanda. And the only difference there is that your repatriation cost is limited to 50,000. The other countries, there's no limit for the repatriation of the vehicle to bring it back to South Africa. We do track day cover. We don't really like it because it is high risk in its nature. So it's expensive cover. It is not for racing, and there's a 50,000 rand excess. So, but if you do have a client who wants this cover, if they they often take the cars on the track for the advanced driving license and to learn how to actually drive the vehicle, then we can offer this cover. So our territorial limits, there's a list of the territorial limits, and we cover the full cost of bringing that car back if it's been in an accident, the towing costs. We cover the car while it's being driven by someone else, basically, the chauffeur services or valet company, and also when it's serviced and repaired. So we do vintage vehicles. You can do motorcycles or motor vehicles here, and we can do classic cars on a standalone basis. We only do it on agreed value. A classic car is a car that's got a registration date, first date of registration older than 30 years. And that qualifies as a classic car. It's a great, the policy is really nice and comprehensive. The rates are very competitive. We really are in the market to do classic and vintage cars. We can do laid up cover where the cover is restricted. We cover temporarily detached parts because the cover is different when it comes to classic cars. People have they take the parts away, they have it repaired and brought back up to 25%. Our territorial limits are very extensive. If you want to take these old jalopies through the sub-Saharan Africa, you can do that and you'll be covered, and the towing costs as well. And then this is the only motor section where we allow the client to choose how they want to be paid. The same as under the property, whether they want the vehicle to be repaired or paid out cash. Because often clients want to take the cash and buy back the salvage and repair the vehicle over time. So we give them that option. Clients can buy the salvage back at a set 25% of the value of the vehicle. Good. So the last section is with regards to our emergency assist services. We've incorporated emergency assist services embedded into the product. So you don't pay an extra premium for it on the policy schedule. So it's home assist, roadside assist services. And also something that's very nice is our chauffeur services. And we've got a fantastic benefit for chauffeur services. So it's drive me home safe after a night out. You can use it for airport drop-offs. You can use it for having your car serviced or anything. It's not limited to just from a restaurant and back. And you get 12 trips a year and a 100 kilometer radius. So it's very nice. And I don't think it will be too much of an issue for you here, but in the Pietermaritzburg and Paarl areas, it's important for us to note that we try our best, but certain parts of South Africa we don't have chauffeur services available, for instance, or it takes 3 hours to get a tow truck to the other side of Koekenaap. These are things out of our control, so we do the best that we can, but the services are available. Whatever your fee arrangements are, your discount mandates, everything just extends to the elite policy, so there's no paperwork to be done. If you don't have an old mutual insure contract, you will have to apply for a new one, but I assume most of the people in the room actually do have OMI contracts. You have to really get on board. It's a fantastic system. It puts the power back into the hands of the broker. Elite will be available on this platform. You can do your own quotes, issue your own policies, amendments, renewals, and also register your own claims. So you don't have to wait for us to capture quotes. I just want to say something around our service levels at the moment. We did our business case and we sort of dreamed of how well this would do, and we've been exceeded. Our expectations have been exceeded. We are really overwhelmed with new business quotes, but there's an end to this problem because our whole business model is that brokers work. Well, the majority of our brokers work on MyInsure, capture the quotes, and that they're not subjected to our turnaround times, that you determine how quickly you get the quotes out. And all we get involved in is to do the discounts on the, if it's on, you've loaded the policy, the quote on MyInsure, you want more discount or it goes over our reinsurance limits, then we get involved. But the rest of the time you in the driving seat and you determine the service levels. Okay, thank you everyone. It was very engaging. Thanks a lot. Okay.